Hello everyone, welcome back to the channel. In this lecture we'll be taking up questions from unit number 4, dissolution of partnership firm. So I'll be discussing important MCQ questions on dissolution of partnership firm for your CUET entrance examination. Okay, so now before we start with the questions, let me just give a brief explanation of dissolution of partnership firm. Okay, so when we talk about dissolution of partnership firm, what do you mean by dissolution of partnership firm? The partnership firm will come to an end, right? The partnership firm will cease to exist. So now what are the accounts which we prepare in dissolution of partnership firm? The first account which you prepare is realization account. Realization account, right? In admission, retirement, debt, we used to prepare revaluation account, but in dissolution of partnership firm we will prepare the first account which we will prepare is the realization account. The second account which we will prepare is partners capital account, and the third account which we will prepare is cash account. Okay, so these are the four account, cash or bank account. So these are the three account which we will prepare in case of dissolution of partnership firm. Okay, now what is realization account? Let's first discuss what is realization account. Okay, realization account. So what is the rule of realization account? The rule will be nominal account. Okay, it will be a nominal account. So all expenses or losses will be written on the debit side of realization account, and all income or gains will be written on the credit side of realization account. Okay, I hope this is clear. Now when we talk about realization, okay, when we talk about dissolution, it simply means that the business is coming to an end, right? So in our business we will have assets, we will have liabilities, creditors like loans taken from partners or loan taken from bank, creditors, right? So what we'll have to do is we'll have to settle all the accounts, we'll have to sell the assets. Okay, sell the assets, and after we sell the assets we will realize the money. Okay, and we'll have to pay back the liabilities. Okay, we have to pay back the liabilities. Now see what will happen. What is the first step in preparing realization account? The first step is to transfer all the assets and liabilities appearing in the balance sheet to the realization account. Okay, the first step is to transfer all the assets and liabilities appearing in the balance sheet. Okay, we have to transfer it to the realization account. Okay, now say for example this is your balance sheet, you have your assets here. Say for example assets of 5 lakh rupees, you have your capital. Okay, there are two partners A and B, 1 lakh each, and you have a creditor of rupees 3 lakhs, say for example. Okay, now the first step is to transfer the assets and liabilities to realization account. Okay, now I don't want you to buy hard anything. Okay, now you know that when you prepare realization account, okay, the assets will be transferred to the debit side 5 lakh, and creditors will be transferred to the credit side 3 lakh, right? Will this capital be transferred? No, this capital will not be transferred. This will go to partners capital account. Okay, I hope this is clear to you. Now see what is the journal entry when we pass for realization account. Let's talk about assets first. Okay, let's talk about assets first. Now these assets, see these assets, we all know that assets will always have debit balance, right? Assets will always have debit balance. So now when we want to close, now we are closing the business. Okay, the business is coming to an end, the partnership firm is coming to an end. Now when you want to end the partnership, you have to sell off the assets, right? We'll have to sell off the assets. So assets account and liabilities account will not have any balance, right? Now we know that assets will always have debit balance. So now if you want to close the account, if you want to finish the assets account, what we'll have to do, we'll have to credit the assets account, right? What will be the journal entry which we will pass? We will have to credit the assets account. Okay, we have to credit the assets account. Now what will be debit? We will debit realization account. We'll transfer this to realization account. See, right? So once you create the assets account, see it will come to the debit side of realization account. Okay, and the next see, in case of creditors, what will happen? Creditors will always have credit balance. So if you want to finish the creditors account, what we'll have to do? We'll have to debit, right? Liabilities will always have credit balance. Increase in liability will go to the credit side, and decrease in the liabilities will go to the debit side. Okay, so the journal into which will pass is creditors account debit to realization account, right? So see, 3 lakh rupees. So this creditors will go to the credit side of realization account. I hope this is clear. Okay, now the second account which we will prepare is partners capital account. Okay, so the partners capital account which we will prepare, partners capital account, right? So partners capital account will be prepared. Okay, partners capital account will be prepared, and see, partners capital, there is a balance of partners capital account, so this will be basically be the balance of the partners capital account, balance BD, right? Balance BD. So what will happen at the end? Say for example, partner is getting any interest on capital. Okay, partner is getting any salary, partner is getting share of profits. Okay, so all these items will come on the credit side of partners capital account. Okay, why? Because all these items will increase the capital balance of partner, right? Now debit side, what will be transferred to the debit side? So for example, there is any drawings. Okay, there is any interest on drawings, there is any loss. Okay, so all this item will what? All this item will decrease the balance of, it will reduce the balance of partners capital account. Simple. Now in case of admission, retirement and debt, what you used to do, you used to have balance CD, right? We used to have the balance of partners capital account. So this balance will be the opening balance of the next year. This closing balance will be the opening balance of next year, right? It will be the opening balance of next year. Now, but in case of dissolution of partnership firm, do you think we should have any balance? No, because the business is coming to an end, right? So whatever is payable, see, whatever is payable to the partners, okay, and whatever is to be charged, okay, to the partners, all the bill, whatever left, what's the amount left, will be paid through cash. Okay, will be paid through cash. So this way we will close the partners capital account. See, this will be the final payment will be done in cash. Okay, cash or bank. Okay, there will be no balance of partners capital account because we have to close the business. I hope this is clear. And the third account which we will prepare is cash account. Now cash or bank, okay, as per the requirement of the question, cash or bank account. Now what will happen? We have transferred the assets to realization account. Now now these assets will be sold. Okay, and all the liabilities, creditors will be paid off. Okay, and the balance, whatever left, will be paid to the partners. Basically, it will, once you make the payment to the partners, your cash or bank account will be tallied. Okay, if any surplus is left, it will be transferred to the partners account. Okay, surplus will be paid to the partners as well. So I hope you have got the overview of these 3 accounts. Okay, now let's start with the MCQ questions. Okay, if there is any requirement of any discussion, we will do that while solving the question. Okay, so now let's move on to the questions. So now let's see the first question. Okay, question number 81 of dissolution of partnership firm. Okay, so basically this is the continuation. Okay, the last question of unit number 3 was 80, so I'm continuing the questions. Okay, there is no we are not starting with question number 1 for dissolution of partnership firm. So let's see question number 81. Okay, what's the question saying? Let's see. Which among the following are modes of dissolution? Okay, which among the following are modes of dissolution? Dissolution by nature. Okay, have you heard about this? Dissolution by nature? No, we have never heard about dissolution of nature. Okay, by nature. Compulsory dissolution? Yes, firm can be dissolved compulsorily. Okay, dissolution by agreement? Yes, if there is agreement between 2 partners, it can be dissolved. Dissolution by notice. Okay, dissolution by notice. Basically, compulsory dissolution means if you have done any illegal work, so your firm will be compulsorily dissolved. And if you got any notice from the court, okay, your firm can be dissolved. And agreement between the partners, okay, in this case also your firm can be dissolved. So what are the modes? Which among the following are the modes of dissolution? Okay, so what will be the answer? The answer will be B, C and D. Okay, there will be no dissolution by nature. Okay, there is no such word as dissolution by nature. So what will be our answer in this case? The answer will be B, C and D. Okay, I hope this is clear. B, C and D. Now let's move to question number 82. On 1st 4 2023, A and B decided to dissolve their firm. Okay, on the date of dissolution, goodwill appearing at rupees 1 lakh. Okay, goodwill appearing at rupees 1 lakh. Okay, so what's the requirement of the question? Goodwill will be, what will be the treatment of goodwill in this case? Okay, transfer to cash account. Goodwill is basically an asset. Okay, goodwill is an intangible asset. Goodwill is an asset. Okay, asset. So let me tell you, goodwill will be treated as normal assets. Okay, only in case of admission. Okay, admission, existing goodwill will be written off. Okay, but in case of dissolution, this will be treated as a normal goodwill. Okay, so when asset is treated, and when goodwill is treated as a normal asset, what should be the treatment? First, it should be transferred to realization account, right? It should be transferred to debit side of realization account. We know this, right? Now, will it be transferred to cash account? No, this is not the right option. Transfer to the credit side of realization account. Will it be transferred to the credit side of realization account? No, right? We know that it will be transferred to the debit side of realization account. Okay, see, when I have discussed this now, I've told you it will be transferred to the debit side of realization account. So this option is also not correct. Option number C, transfer to the credit side of partners capital account in their profit sharing ratio. Will this be transferred to partners capital account? No. Okay, and what is the last option? Transfer to the debit side of realization account. So basically this will be our right answer. So D is our right answer. Okay, answer of question number 82 is D, transfer to the debit side of realization account. Now let's move to question number 83. What's the question saying? X and Y were in partnership, sharing profits and losses as 3:2. Okay, the firm dissolved on 31st/3/2023. Okay, on the date of dissolution, Y's loan was rupees 20,000. Okay, Y is a partner and he has given loan to the partnership firm, and the balance of the loan payable was 20,000. Okay, Y agreed to take stock. Okay, already transferred to the realization account. Of rupees 15,000. Okay, the value of the stock in the balance sheet was 15,000. Okay, which was transferred to the realization account. Okay, but Y has agreed to take it at rupees 18,000. Okay, Y has agreed to take stock at 18,000, and the balance in cash for the settlement of loan. Journal entry will be, now we'll have to pass journal entry. Okay, so Y's loan was 20,000. Okay, Y had taken stock, value 15,000 at 18,000. Okay, and the balance was settled in cash. Okay, so if the loan is 20,000, if the loan is for 20,000 and he has taken stock value of 15,000, see, the stock value is 15,000, but Y is taking it at 18,000. Okay, so what's the balance? Balance of 2,000 will be paid in cash. Okay, now we'll have to pass the journal entry for this. Okay, now before we move to this question, let me just explain one thing. Okay, question number 83. Now, many of you, I know, I have seen the notes of my students. Okay, students, what they used to do is loan account. Say for example, Y loan in the example, right? In the question was 20,000 was Y's loan account. Okay, now what student used to do is this loan, Y's loan, they used to transfer it to Y's capital account. Okay, the balance of Y's loan used to be transferred to Y's capital account. This is completely wrong. Okay, this is completely wrong. You cannot transfer Y's loan to Y's capital account. Okay, what's the logic? What's the reason behind this? Because loan, okay, how will we pay, how will we make the settlement? What is the rule to make settlement? Okay, let's see. You sold the assets, you get some money. Okay, now from that money, the first thing you will do is you will settle third party liabilities, or you can say outside liabilities. Okay, if you have taken any loans from the bank, if you have any creditors, if there is any outstanding salaries, okay, those items will be paid first. Okay, then second, okay, we will settle partners loan. Okay, the second item which will be settled is partners loan, and the third item which will be settled is settle partners capital account. Okay, so this is the sequence how we will distribute the money. Okay, you will get questions on this also. Okay, now this is the sequence how we will settle the money, how we will use the money, okay, which we realize from selling the assets. Okay, now what student used to do is, when they prepare their partners capital account, when partners capital account is prepared, okay, when partners capital account is prepared, by balance BD, there is the balance of capital account. Now they used to transfer Y's loan also to the capital account. Okay, so this is completely wrong. Okay, you cannot do this. This is completely wrong. Okay, so now your question you may have a question that where will this loan account be transferred? Okay, where will this loan account be transferred? Will it be transferred to realization account? Will it be transferred to realization account? No, it will not be transferred to realization account. Okay, separate account will be prepared. Okay, separate account will be prepared for settlement of partner's loan. I hope this is clear. Okay, so you can note this down. Okay, this is the way you will settle this is the step of settlement. Okay, and you can note this one note. Okay, separate account will be prepared for settlement of partner's loan. Now let's come back to the question 83. What's the question saying? There is a loan of 20,000. Okay, there is a loan of 20,000 which was settled. Okay, Y took stock of 15,000 and 18,000 and the balance was paid in cash. Okay, now see how will we solve this. Okay, now see, let's say for example there is a realization account. Okay, realization account which says that the question is saying that stock has been already transferred to realization account. Okay, stock has been transferred to realization account. What was the value of the stock? 15,000. Okay, now it has been taken by Y. Okay, stock has been taken by Y for the settlement of Y's loan. Okay, so what will be the journal entry here? What will be the item here? How will we write this? By Y's loan account. Okay, at 18,000 rupees. This is how you will do. Okay, why I have done this? Say for example stock, the balance of your stock is sold out. Okay, you have normally sell the stock. So what will be the journal entry? Cash will come in, cash account debit to, it will go to realization account, right? So this will be the journal entry in case of you have sold the stock. But in this case, in our example, this stock has been used to settle Y's loan, right? So what will be the journal entry? Y's loan account debit to what? To realization account. Okay, 18,000. So this will be the journal entry in this case. Done. So we have prepared journal entry, we have prepared realization account. Now let's see what's the question saying. Okay, we had Y's loan has been settled. Okay, Y's loan has been settled by he's taking the stock at 18,000 and the balance is paid in cash. Okay, now if we have to prepare Y's loan account, I've told you now Y's loan account will be separately prepared. Okay, Y's loan account. So what will be the balance? It will have credit balance by balance BD. Okay, 20,000 is the loan amount. 20,000 is the loan amount. Okay, and he's taking stock of 15,000 at 18,000 rupees, right? So see, we have prepared realization account, we have written Y's loan account. Okay, so what will be the entry in Y's loan account? To realization account. How much? 18,000, and the balance is paid in cash, 2,000. Right, now we have to pass journal entry for this. Okay, so what will be the journal entry? Y's loan account loan is a liability, right? Loan is a liability, so it will have what? It will have credit balance. So if we have to finish the liability, if we have to close the liability account, we'll have to debit the liability, right? So we will debit Y's loan account debit, okay, to realization account, and the balance is paid in cash to cash account. Okay, what is the liability? 20,000. Realization account, he is taking stock for 18,000 and the balance is paid in cash. Okay, so this is the journal entry which we will have to pass in this case. I hope this is clear to you. You can note this down. Okay, you pause the video and you can note this down. This is how it will be done. Now first the assets, we cannot write stock here. We cannot write stock here. Okay, we cannot write stock here. Why? Because stock has been transferred to realization account, right? We have already closed the realization, we have already closed the stock account when the money was realized or when Y took the stock. Okay, so we'll have to write realization account. So this will be the journal entry. So you can note this down. I hope this is clear. Now let's move to next question, number 84. Okay, let's see question number 84. What's question number 84 saying? What will be the share of deceased partner? Okay, what will be the share of deceased partner whose ratio was 1/4? Okay, whose ratio was 1/4 if the turnover in year of that, okay, in year, basically this is question of that. Okay, so this should not be here, this should be in unit number 3. However, it's fine, let's solve. Okay, what will be the share of deceased partner whose ratio was 1/4 if the turnover in year of death, okay, in year of death till the date of that was 8 lakh, okay, and in previous year was rupees 20 lakh, profit in previous year was 4 lakh. Okay, now what's the requirement of the question? We have to find out the share of this is partner. Okay, profit of this is partner. So now basically what the question is saying, let's see. Question number 84. Okay, question number 84. Okay, question number 84. So what is the question saying? The question is saying that this is the year end, this is the beginning of the year. Okay, 1/4, let's say 2023, and the year will end on 31st/3/2024. Okay, so what's the question saying? What will be the share of this is partner, whose ratio was 1/4 if the turnover in the year of death till the date of death was 8 lakhs. Okay, so if the turnover for this period, say for example he have died here. Okay, he have died here. If the turnover for this period is 8 lakhs, if the sales, basically turnover means sales. Okay, if the sales is 8 lakhs, we have to calculate the profits. Okay, so current year profit, current year sale till the death is how much? 8 lakhs. And the question has given us previous year sale. Okay, previous year sale for 12 months basically. Okay, it's 12 lakhs. And previous year profit is given how much? Profit is given 4 lakhs. Okay, so the profit is 4 lakhs. So now what we'll have to do, we'll have to find out this is partner share. Okay, so how will we calculate? Taking this data, okay, using this information, using these two information, we'll have to calculate the profit for this period. We'll have to calculate the profit for this period. Sales has been given, see, sales has been given 8 lakhs. Now we'll have to calculate the profit for this period. Okay, for this period. Now how will we solve this? It's very simple. See what will happen. Okay, profit divided by sales, okay, of previous year into sales of current year. See, profit is 8 lakh, sorry, profit is 4 lakh, and the sales for the previous lakh is, this should be 20, no, this should be 20, this should be 20 lakhs, right? Profit is 4 lakhs and the sales is 20 lakhs. Okay, so what will be the profit for 8 lakhs? Simple. Okay, what will be the profit? The profit is 1,60,000. 1,60,000. Okay, so this is the profit for this period. This is the profit for this period. Okay, and now we know that this is partner share. He's getting how much? 1/4. 1/4. Okay, so he's getting 1/4. So what will be the share of this is partner? Share in profit of this is partner. How will we calculate? If this is the share of all the partners, for this is the profit of the firm, so the this partner is getting 1/4. Simple. Okay, so what will be his share? It will be 40,000. So this will be the answer, 40,000. Okay, I hope this is clear. Okay, you can copy, you can note this down. You pause the video and you can note this down. Okay, I hope this is clear. See, this part you may have problem in this part. Okay, you may have problem in this part. It's simple. See, if 4 lakh is the profit and 20 lakh is the sale. Okay, so if I divide the profit, by the amount of sale, I will get profit per ₹1 of sale. I will get this. Okay, if I divide profit by sales, if I divide my profit of 4 lakhs by 20 lakh, okay, which is the sales, I will get what? I will get profit per ₹1 of sale, right? For 1 rupees, the amount of the sales of 1 rupees, I'll get the profit, right? And if I multiply it by 8 lakhs, if I multiplied it by 8 lakhs, I will get the profit for 8 lakhs. Okay, so this is how it is done. Simple as that, right? Now we are done with question number 84. Let's move to question number 85. What's question number 85 saying? Let's read it out. Okay, A, B and C are partners who decided to dissolve their firm. Okay, A, B, C are partners. They have decided to dissolve their firm. Realization expenses were to be borne by Y. Okay, realization expenses were to be borne by Y. Who will borne the realization expenses? Sorry, this should be C. This should be X, Y, Z. No? So this should be B. Okay, so realization expenses will be borne by B. Realization expenses will be borne by B. Okay, for which he was to be given remuneration of 10,000 rupees. Okay, there are three partners, A, B and C. Okay, they have decided to dissolve the firm, Now realization expenses. What do you mean by realization expenses? You are selling off the assets, right? You are paying the liability, so there will be certain expenses, right, which you will incur during the dissolution of the firm. Okay, so those type of expenses will be called as realization expenses. Okay, now it will be borne by B, for which he was to be given remuneration of 10,000. Okay, how much he was given? He was given remuneration of rupees 10,000. Okay, actual expenses were 12,000. See, what was the actual expenses? 12,000. Okay, now what's the requirement of the question? How much amount will be transferred to credit side of Y's capital account? Credit side of, this should be B's capital account. Okay, credit side of B's capital account. Okay, I hope you have understood the question. Okay, now let's see. There are three partners, right? There are three partners, A, B and C. A, B and C. Okay, now B is to bond the realization expenses. Okay, now what is the agreed expenses? Agreed expenses is 10,000, but how much has B spent? B has spent 12,000, right? B has spent 12,000 rupees. Now the requirement of the question is, how much will be transferred to the credit side of partner's capital account, to the credit side of B's capital account. Okay, so in this case you will always have to remember is what is agreed between A, B and C. Okay, now A, B and C had a meeting, say for example. Okay, let's take an example. A, B, C had a meeting, and A, B, C have decided that B will be the person who will do the realization expense, who will bond the realization expense. Okay, so B will be the person responsible for selling off all the assets and paying off all the liabilities. Okay, and they three have decided that expenses will be 10,000. Okay, so these expenses which they have discussed, which they have agreed is 10,000, but B, he has spent how much? 12,000. Okay, B has spent rupees 2,000 extra. Okay, now what should be a logical treatment of this? Should 10,000 be given to B or 12,000 be given to B? Transfer to credit side. Okay, so the right answer is 10,000. Sorry, the right answer is 10,000. Okay, so whatever is decided between all the partners, that will be given to the partner who is doing the realization. Okay, so 10,000 will be transferred to credit side of realization, credit side of partner's capital account, credit side of B's capital account. Okay, so the right answer for this question is 10,000. See, there is a treatment of 2,000 also. Okay, but we will not discuss that now. Okay, we'll just go as per the question. So what's the answer of 85? Answer of 85 is 10,000. Okay, I hope this is clear. Now let's move to question number 86. Question number 86. Okay, what's the question saying? In case of dissolution of firm, assets of the firm shall be applied in the following purpose and order sequence. Basically, we'll sell the assets, right? We'll get some money, we'll realize money by selling the assets. Now how will we apply this asset? How will we apply this money? Okay, in which sequence? So the question is basically asking us that. Okay, now we'll have to see the options. Okay, what's the option number A? Paying to each partner. Okay, paying to each partner. This should proportionately. Paying to partner proportionately, which is due to him on account of partnership, on account of capital, right? Now let's come to this, the first discussion which we have done, right? See, I have told you the sequence now. The first sequence will be settlement of third party liability. Second sequence is settlement of partner's loan. Third sequence is settlement of partner's capital. Okay, so this basically will be settled at last, right? This basically will be settled at last. Okay, now point number B, in paying the debt of the firm to the third party, right? So I guess this should be the first thing which we will pay, right? Now let's see point number C. In transferring amount to general reserve, will any amount be transferred to general reserve? No. So this option is not valid at all. Okay, we are selling the assets, we are getting some money, it will never be transferred to general reserve. Okay, point number D, residual, if any, to be divided among the partners in the profit sharing ratio. What do you mean by residual? Residual means leftover. Okay, so leftover will be at last. Okay, this is I have written last here, right? So this will be after point A. Point D will be paid after point A, after A. Okay, now let's see point number E. What's point number E saying? In paying each partner proportionately what is due to him, okay, from the firm for advances. See, partner's loan, basically it's talking about partner's loan, right? The sequence was A, third party liability, B, partner's loan, C, to partner's capital. Okay, payment in case of partner's capital account. So what should be the right answer? This should be first, B will be first, E will be second, and A will be third option. Okay, and D will be fourth option. Okay, residual, whatever leftover is will be transferred to partners in the profit sharing ratio. Okay, so what should be the answer for this question? 86. B, E, B, E, B, E, A and D, B, E, A and D. Okay, B, E, A and D. See, first the third party liability, third party will be paid first. Okay, and second, partner's loan will be paid. Okay, third, capital due to him on account of capital will be paid, and whatever leftover residual will be transferred to partners, will be given to the partners in their PSR. Okay, I hope this is clear to you. So answer of question number 86 is BEAD. BEAD. Okay, now let's move to question number 87. Question number 87. A, B and C were partners in a firm. Okay, A had advanced a loan of rupees 20,000. Okay, A is advanced a loan of rupees 20,000, which was settled by paying him rupees 18,000. Okay, the correct treatment would be, okay, which was settled by paying him rupees 18,000. Okay, basically the firm had taken loan from A 20,000 and they had paid him 18,000. Okay, they have paid him 18,000. Now what will be the journal entry for this? What will be the correct treatment? Okay, let's see. Bank account, point number A, bank account will be credited by 20,000. Bank account basically means the liability. What is the amount of loan? 20,000, but they are paying him how much? They are paying him only 18,000. Okay, so this option is at all not valid. So this option is not valid. Now point number B, realization account will be credited by 2,000. Point number C, bank account will be credited by 18,000. Right? Yes, we are settling him by paying how much? 18,000. Okay, so this option is correct, I guess. Okay, and bank and realization account, point number D is saying bank and realization account would be credited by 18,000 and 20,000 respectively. Bank account will be credited by 18,000. This option is right. We'll pay him 18,000, and realization would be credited by 2,000 respectively. Okay, so there is a confusion between these 3 points, right? These 3 points. So now let's understand this through a journal entry. Okay, question number 87. Question number 87. Question number 87 or 6? Question number 87. Yes, question number 87. Okay, so see, what is the amount due to him? Amount due is 20,000. Okay, how much we have paid? We have paid him 18,000. Okay, so there is a difference of 2,000 rupees, right? So now let's understand it with the loan account. Okay, let's understand it with the loan account. So A, right? So I have told you now we will prepare a separate loan account. Let's prepare a loan account. Okay, so what will happen? There will be a balance BD, right? Loan will always have credit balance 20,000 rupees. Now we are paying him cash of 18,000 rupees, right? We are paying him cash or bank of 18,000 rupees. So what will be the journal entry? A's loan account debit to cash, right? We are paying him 18,000. So to cash or bank, how much? 18,000, right? Now 20,000 is the liability. 20,000 we have to pay 20,000, but we are paying only 18,000. So there is a profit of how much? There is a profit of 2,000. So where will this profit go? Will it go to profit and loss account? No, it cannot go to profit and loss account. Why? Because we are closing the business, right? So the profit, the difference will go to realization account. Okay, realization account of 2,000. Okay, realization account of 2,000. Now when you prepare a realization account, what will happen? It will go to the credit side, right? Credit side is for debit all expenses, all income or gains. This is for expenses or losses, right? So for the firm, if you see from the point of view of firm, there is a gain of 2,000 rupees now, because they have to pay 2,000 less. Liability was 20,000 and they are paying only 18,000, right? So it will go to the credit side by A's loan account 2,000, right? So realization account is created by how much? 2,000 rupees. Okay, so now let's come back to the question. What's the option? Point number D. I guess point number 3 is the correct option. Okay, bank account and realization account would be created by 18,000 and 2,000 respectively. Yes, see, realization account is being created by 2,000 rupees and bank account is also created by 18,000 rupees. Cash is going out, right? So the right answer for question number 87 is point number D. Okay, point number D. Bank account and realization account will be created by 18,000 and 2,000 respectively. Okay, if you want, you can note this down. You pause the video and you note this down. Okay, I hope it is clear. Very logical, right? You have to understand, you have to apply these concepts. Okay, you have to think. You cannot simply make choices on your basis that it is right or wrong. Okay, you cannot just read it. You just have to apply the concept, and if you solve this way in your exams, obviously you will not face any problem. Okay, now let's come to question number 88. Question number 88. Okay, so what is the question saying? Compulsory dissolution. Okay, compulsory dissolution of a firm takes place in the following circumstances. Where will a firm be compulsorily dissolved? Okay, point number A, death due to death of one partner. Okay, when a partner dies, will it be compulsorily dissolved? No, right? Other partners are there to carry on the business. Point number B, when all partners, okay, when all partners or all but one partners become insolvent, rendering them incomplete to sign a contract. Okay, so for example, when all partners or one partner become insolvent. Okay, insolvent means he becomes bankrupt. Okay, he is not left with any money, rendering them incompetent to sign a contract. Okay, so for example, all the partners, okay, they become insolvent, they are not able to sign any contract, right? So will this firm be compulsorily dissolved? Yes, I guess this is the correct option, right? Now let's move to option number C. When the firm becomes illegal, right? When the firm becomes illegal, will it be compulsorily dissolved? Yes, I guess this is the right option, right? It will be compulsorily dissolved because no one is allowed to do illegal business, right? Point number D, with the consent of all partners. Okay, with the consent of partners. When there is consent of all partners, say for example, all the consent means agree. Okay, all the partners agree to dissolve the business. Will there be compulsory? No, because this is through agreement. Okay, so this is not the right option. Now come to point number E, in accordance with the contract between the partners. Again, okay, in accordance with the agreement. So if there is an agreement, it cannot be a compulsory dissolution, right? So the right option for this answer is B and C. Okay, so the answer for question number 88 is option number B and C. I hope this is clear. Okay, now let's move to question number 89. Okay, now what's the question saying? A and B partners of a firm decided to dissolve the business on 31st 2023. The firm decided to pay realization expense of 1,000 on behalf of M. Okay, rupees 1,000 will be debited to. Where will 1,000 rupees be debited to? Okay, now who is responsible for doing the realization? M is responsible for the realization work. Okay, now what is the amount which has been decided? What is the amount which has been decided? It has been decided that M will be the person who will bond the realization expenses. Okay, M is the one who is responsible for realizing the assets. Okay, so basically, with what do you mean by this is M is the person who will pay the realization expenses. The firm will not pay. Okay, M will pay the realization expenses. Now, who is paying the realization expense on this behalf? The firm is paying. Right? Who should pay? M should pay. But who is paying? Firm is paying. So the cash of the firm is going out. But whose cash should go out? Partner's cash should go out. Right? Partner's cash should go out. M's cash should go out. But whose cash is going out? Firm's cash is going out. Now, what will happen when the firms make settlement? Okay, when the firm pays the final cash to the partner, what will happen? The firm will reduce 1,000 and pay the balance amount to the partner. Okay, now what is the requirement of the question? On behalf of M rupees on the dash will be debited to. This 1,000 will be debited to which account? Will it be debited to realization account? No, because the expenses of the firm will be debited to realization account. Okay, but this expenses is borne by M. M is the person responsible for doing the realization. Okay, now there is a difference. Okay, if the firm has chosen M to do that, this is the realization expenses, it will be the expenses of the firm. Now M will be the person who will do the realization work, but money will be paid by the firm. But in this example, in this question, who is responsible for paying the realization expenses? M. Okay, so the correct option for this answer will be M's capital account. Okay, it cannot be bank account. Okay, it cannot be bank account because bank is creating a bank cash is going out, so bank is created. Okay, so this cannot be option, the correct option. And D, A's capital account. A is nowhere in the picture, right? B is the one who is responsible. So there will be confusion between these two options. Okay, there will be confusion between these two options. So the right answer will be M's capital account. Okay, I hope this is clear. Question number 89. Now let's move to question number 90. Now see, there is a case study. Okay, so we'll have to solve this case study. Okay, now let's read the case study first. What is the case study saying? A and B were partners in a partnership firm. Okay, due to ill health of B, okay, due to ill health of B, they decided to dissolve the firm. Now is this a compulsory or dissolution through agreement? This is dissolution through agreement. Okay, the position of assets and liabilities on the date of dissolution was, okay, the question has given us one balance sheet. Let's say capital of 1 lakh and 1,40,000, loan by B, there is a partner's loan of 40,000, goodwill of 30,000, furniture to 40,000, building 90,000, debtors 50,000, cash balance is 50,000. Okay, now let's see what's the adjustment given. Okay, it was agreed that following transaction will take place. Okay, it was agreed that following transaction will take place. A wanted to start a business in sole proprietorship, so he took building and furniture at 10% less than book value. Okay, A has taken the furniture and building at 10% less than book value. Okay, so what is the book value of building and furniture? See, 90,000 and 40,000. Okay, so A has agreed to take them at 90% basically, right? 10% less than the book value. So he will take at 90,000 at 90%. Okay, 10% less than the book value. So basically it will be a gain for the firm now, because furniture has been realized at less than the book value. So it basically will be a loss for the partnership firm. Okay, sorry, it will be a loss for the partnership firm. Now see, point number B. All the debtors proved good, means all the debtors, they have paid all the amount except a person C who did not pay 10,000. So what is this 10,000? This is your bad debt amount. Bad debts. This is the bad debts, right? Now what was the debtors amount? 90,000. So out of 90,000, out of 50,000, we could not receive 10,000. Okay, now let's see what's the requirement of the question. What's the question saying? Question number 90. Due to ill health of B, okay, they decided to dissolve the firm. Okay, it comes under form of dissolution. It comes under which form of dissolution? Let's see the options. Okay, option number A, dissolution by notice. Is this a dissolution by notice? No, this is not the correct option. On the happening of certain contingencies. Contingency means on happening of certain future events. Okay, no, this is also not right option. Dissolution by court. B is not well. He, due to his ill health, they are dissolving the firm. Okay, so will court give any order in this case? No, the court has nothing to do with this. Okay, dissolution by agreement. So the right answer will be dissolution by agreement. Okay, so the answer for question number 90 is dissolution by agreement. Now let's come to question number 91. The amount recovered from debtor is, see, the question has told us now there is a bad debts of 10,000 rupees. Okay, so what is the amount of debtors? 50,000. So out of 50,000, if we did not receive 10,000, what will be the amount which we will receive? The amount which we will receive is 40,000, right? 50,000 is the amount of debtors in our balance sheet, and all are good except 10,000. So we will not receive 40,000. Okay, so the answer for question number 91 is 40,000. Now let's move to question number 92. What is the question saying? Question number 92. Following items appear on the debit side of realization account. Okay, which of the items will be appear on the debit side of realization account except, okay, what are the items which will not appear on the debit side of realization account? Basically the requirement of the question is that, okay, following items appear on debit side of realization account except, okay, transfer of assets. Okay, when you prepare your realization account, assets will be transferred to the debit side, no? So this is not the right option. Okay, assets will be there in the debit side. Payment of liabilities. When you make payment to liabilities, okay, cash is going out to cash. Okay, so this will be transferred to the debit side of realization account, bank or cash. So this also will be there in the debit side of realization account. Provisions, right? Now where you used to transfer the provision? Provision is to be transferred on the credit side. Okay, so this is the right option. Realization expenses. Realization expenses will also be transferred to the debit side, right? So this is also not the correct option. Assets taken over by partner. Now this will come on the credit side, right? By partner's capital account. See, you have debited assets. Now when you receive cash, say for example cash to realization, bank to realization. It will come on the credit side of realization account, right? So what is the right option? C and E. So the answer for question number 892 is C and E. Okay. Question is saying following items appear on the debit side of realization account except provision and assets taken over by partners. So this is the answer for question number 92. Now let's move to question number 93. Okay, question number 93. What's the question saying? The treatment of goodwill appearing in the balance sheet will be, see, in the case study balance sheet has been given now, and what is the amount of goodwill? 30,000. Okay, goodwill appearing in the balance sheet. The treatment of goodwill appearing in the balance sheet will be, what will be the treatment? I have told you now, only in case of admission existing goodwill will be written off, right? In your example, in your the way you have studied, only goodwill appearing in the balance sheet will be transferred to the debit side of partner's capital account in case of admission. Now in case of dissolution, I have told you it will be treated as a normal asset. Okay, normal asset. So what will be the right option? Let's see. Transfer to debit side of realization account. Yes, I hope this is correct option. Written off among the partners. Written off among partners in all ratio. No, this is not correct. Transfer to the credit side of realization account. Will it be transferred to credit side of realization account? No. Assets used to be transferred to the debit side. No. So this option is also not correct. Raised and written off. No, it is never raised and written off. So right answer for this question is A. Question option number 1. Transfer to debit side of realization account. Okay. I hope this is clear. Okay. So we are done with question number 92. Now let's move to question number 94. Okay. So basically we are done with the case study questions. Okay. Now let's move to question number 94. The accumulated profits and reserves are transferred to. Accumulated means previous year's profits. Okay. So for example 2018 you have 50,000. Out of 50,000 you have spent 30,000. You are left with 20,000. Okay. And 2019 you had 70,000. Out of 70,000 you have spent 60,000. So you are left with 10,000 and so on. Okay. So these profits of the previous years. Okay. Where will it go? It will go to P&L account now. P&L account. So this will be accumulate. Okay. Accumulate means to keep safe in one place. Let's say that way. Okay. Now what will be the treatment of accumulated profits and reserves? Okay. What will be the treatment? We know that it will be transferred to the what? Credit side of partner's capital account, because this reserves, these profits belongs to the partners. Okay. So will it be transferred to revaluation account? Will it be transferred to revaluation account? No. Will it be transferred to realization account? No. Will it be transferred to partner's capital account? Yes. Will it be transferred to cash or bank account? No. Okay, because cash is not coming in now, or it's going out. So the right answer is point number 3. Okay, point number 3. So I hope you have understood this. So now let's move with question number 95. What's question number 95 saying? Let's see. On dissolution of the firm, partner's capital account are closed through. Partner's capital account are closed through. I have told you when we prepare partner's capital account. Okay, partner's capital account. When we prepare partner's capital account, how will we settle the balance of partner's capital account? We will pay it through cash or bank. Okay, so this is what question is asking us. On dissolution of firm, partner's capital account are closed through. Is it closed through realization account? No, it is not closed through realization account. Drawings account? No. Loans account? No. So the correct option is D, cash and bank account. Okay, we are done with question number 95. Cash and bank account is the right answer. Now let's see question number 96. Okay, let's see what's question number 96 saying. In the balance sheet, total debtors appearing at rupees 1,50,000. Okay, total debtors, the value of total debtors is 1,50,000, and provision for doubtful debts appear at rupees 1,500. Okay, provision is 1,500. How much amount will be realized from debtors? Okay, how much amount will be realized from debtors if bad debts amount to 20,000 and remaining debtors realized at a discount of 15%? Okay, now before moving further with this question, let me quickly explain you what is bad debts and what is provision. Okay, basically I'm not thinking that you don't know anything. Okay, but there are few students, I know there are students whose concepts are not that clear, especially in accounting, right? There are students who simply have by heart how to do things, right? Their concepts are not clear. So I will not go in depth, okay, explaining all the concepts, but I'll just give you an overview. Okay, if I feel that it is worth explaining. Now let's see the difference between bad debts and provision. Bad debts and provisions. Okay, so now what's the major difference between bad debts and provisions? See, when will you record the bad debts? When the event has occurred. Okay, say for example, there was a person called A who had purchased goods on credit from you. Okay, basically it will be a sales for you. So you had sold goods on credit for 10,000 rupees, for example. Okay, now on payment day you could only receive 9,500. Okay, so what is this 500 rupees which you have not received? So this will be called your bad debts. Okay, basically this will be your loss. Okay, you had sold goods for 10,000 rupees. Okay, and on the payment day A could pay you only 9,500. So this is what 500 is your loss. Okay, so this is your bad debts. Okay, this is your bad debt. So bad debts will be recorded when the event has occurred. Okay, when we know that this 500 we will never receive it again. Okay, this is bad debt. Now provision. See, in case of provision, what is a provision? Okay, now let me explain you through this timeline. Okay, first for 2023, 31st 3 2024. Okay, this is your current year, this is your previous year. Okay, now say for example on 1st November 2023 you have sold goods. Okay, 1st 11 2023 you have sold goods for rupees, how much? For rupees 10,000. Okay, you have sold goods for rupees 10,000. Now at this point, okay, now you have sold goods at this point, and the payment which you will receive is, say for example, at this point. Okay, on the next year. Sorry, this is current year, this should be next year. Okay, next year. Okay, so you have sold goods at this point. Okay, you have sold goods at this point, but the payment you will receive is in this point. Okay, so this is your year end. We know that at the year end we will close our books of accounts. Okay, we will close our books of accounts, but the sales which you have done on this point, at this period, okay, at this point, the payment will be received next year. Right? So now as a businessman, okay, you will always have a fear of not receiving some amount. Right? There are always situations, there are always cases where bad debts will obviously occur. Okay, bad debts will obviously occur. Now say for example you are at this point at the year end. Okay, at the year end, now the sales which you have done on the current year, payment will be received on next year. Okay, now can there be a case where you did not receive some amount? Say for example 10,000 was the sales amount, and out of this you receive only 9,500. So 500 you will not receive, right? So this will be called your bad debts. Now what is provision for bad debts? Now at this point at year end, when I'm preparing my books of accounts, okay, I have a doubt that the sales which I have done at this point, I may not receive the whole amount. I may not receive the whole amount. That's why it is called as provision for bad and doubtful debts, right? I have a doubt that I may not receive all the amount. Okay, so at this point what I will do, I will decide to, make a provision so that loss of current year, right, loss of current year will not be a loss for the next year, basically. Okay, so this sales which I have done at this point, okay, and if I did not receive the whole amount, which year's loss it will be? It will be the loss of current year. Okay, it will be the loss of current year because the sales which I have done is in the current year. Okay, but the payment which I will receive will be on the next year. So this loss, if I have incurred any loss, if I did not receive any money, this loss will be basically taken to the P&L account of the next year, right? P&L account of the loss next year. But there is a there is a law which says that anticipated losses can be recorded in the current year only. Okay, so I have a doubt I will not receive some amount in the next year. Okay, the sales of which is of the current year, and the amount will be received in next year. And if I have a doubt at the year end, what will I do? I will create a provision for bad and doubtful debts. Okay, provision that I will not receive some amount. Okay, so this way what will happen when I prepare my P&L account of the current year? Okay, to provision for bad debts, 500 rupees. Okay, I will book the loss in my debit side in the current year itself. Understood? So this is the concept of bad debts and provision. I have discussed in detail, okay, in the demo lecture. You can go and watch it from there. Okay. So I hope this is clear. Now let's move to the question. Okay, what is the question saying? In the balance sheet, total debtors appear at 1,50,000 and provision for doubtful debts appear at 1,500. Provision is how much? 1,500. Okay, what do you mean by provision? Is this actual loss or anticipated loss? This is an anticipated loss, right? We have just calculated it on our assumption. Now how much will be realized from debtors? How much we will get? How much money we will get from the realized if bad debts amount to 20,000? Bad debt means the amount which we have not actually received is 20,000. Okay, and remaining debtors realized at a discount of 15%. Okay, at a discount of 15% means we have not received 15%. Okay, we have received only 85%. Out of 100%, if 15% is discount, we have received 85% of the debtors amount. Now let's do a calculation for this. Okay, question number 96. Okay, what was the debtors amount? Debtors amount was 1,50,000. Okay, out of this, how much is bad debts? Bad debts is 20,000. So what I have received, actual amount received is 1,30,000. Okay, now out of this I will receive only 85%, right? So what will be the 85% of 1,30,000? Okay, see, 85% means 100 out of 100%. I have given 15% discount. So how much will I receive? I will receive 85%, right? So 130 into 85% is 110500. Okay, so this much will be realized from the debtors. Okay, so this is the answer for question number 96. So what is the answer? 110500. Okay, this provision for bad debts has nothing to do. This 1,500 has nothing to do with our calculation. Okay, because this 1,500 is a provision. We have created provision. Okay, the actual amount is 1,50,000 of the debtors. Out of 1,50,000, we did not receive 20,000. Okay, and the remaining is received at a discount of 15%. I hope this is clear. Now let's move to question number 97. Question number 97. Okay, what's the question saying? A firm, wait a second now. What's the question saying? A firm may not be dissolved by court in the following conditions. Okay, what are the conditions where a firm will not be dissolved? Okay, will not be dissolved by the order of a court. Let's see, point number A. Option number A is when a partner becomes permanently incapable of performing his duties as a partner. Okay, in this situation, do you think the court will order the firm that you have to close your business? Yes, because the partner has become what? The partner has become incapable of performing his duties, right? In this case, the court will order dissolution. Okay, but what is the requirement of the question? A firm may not be dissolved. In which situation, right? So in this situation, it can be dissolved, right? So this is not the right option. Now point number B. When a partner is guilty of misconduct. Misconduct means doing some wrong work. Okay, misconduct means doing something wrong. Misconduct which is likely to adversely affect the business of the firm. Okay, he have done some wrong work, because of this the business will be affected. So will the court order dissolution in this case? Yes, the court can order. The court may order dissolution in this case. So this is also not the right option. Okay, point number C. When a partner persistently commits breach of partnership agreement. Okay, persistently commits breach of partnership agreement means he commits breach of partnership agreement. Okay, there is something written, something different is written in partnership deed. Okay, but a partner is continuously what? Persistently means continuously he is breaking the clause, breaking the rules which is written in the partnership agreement. Okay, so in this case, can the court order dissolution? Yes, the court can order dissolution in this case. So this is also not the right option. Now we are left with only point number D. When all the partners give their consent for dissolution. Okay, when a partner gives consent for dissolution, this will be a dissolution by agreement. So when a firm is dissolved by agreement, will court come into play? No, court will have nothing to do with dissolution in case of agreement. Okay, so this will be the right option for question number 97. So the answer for question 97 is D. I hope this is clear to you. Okay, now you can note this down. Now let's move to question number 98. Okay, let's see what's question number 98 saying. On dissolution of the partnership firm, the amount realized from sale of assets will be applied in following order. Again, simple, right? The amount which we have, this is a repeated question. Okay, we have sold the assets, and the money which we get after selling the assets, how will we apply that assets? We know first rule is outside liabilities, second is partner's loan, third is amount will pay to the partner. Okay, now let's see option number A. Distributing the amount left among the partners in their PSR. Residual amount, any amount left will be transferred to the partners in the profit sharing ratio. This will be done at the last, right? Point number B, paying amount due to partners on account of loan advanced by him. This will be the second step, right? Paying amount due to creditors. Creditor is a third party liability, so this will be paid first. Paying partners capital account balances, so this will be paid third, right? So what will be the answer for this question? Question number 98, C, B, D, A. C, B, D, A will be the answer. C, B, D, A. Okay, we will pay the creditors first. Creditor is a third party liability, we will pay them first. Okay, then we will pay the partner's loan. Okay, then we will pay capital account of partner, balance of capital account, and any amount left will be paid to the partners in the profit sharing ratio. Okay, I hope this is clear, simple, right? Now let's move to question number 99. We have to match list 1 with list 2. Okay, match the items and their related accounts while preparing accounts for dissolution. Okay, now we are preparing accounts for dissolution. We will prepare 3 accounts, right? Realization, capital, partners capital, and cash account, right? So we'll have to choose the right option for this. Okay, so now building is there in the balance sheet. Where will it be transferred? It will be transferred to the realization account. Okay, it will be transferred to the realization account. Now general reserve, where will it go? It will go to the credit side of partners capital account. Okay, advertising expenses. What is advertising expenses? I will explain. Okay, like let me explain advertising expenses before we start. Okay, question number 19. So this is a concept of preliminary expenses. Okay, this is a concept of fixed thesis assets. There are 3 types of assets. First is fixed, second is current, third one is fixed thesis assets. Okay, what do you mean by fixed thesis assets? It simply means the assets are not real assets. Okay, the assets are not real assets, but they have been given the head of assets. They have been given they have been categorized under the assets. Okay, now we have to understand this concept. Okay, it's very easy and a very simple concept. Let's try to understand this. Okay, I don't think your teachers have explained this concept in the classroom. Simply, if any expenditure is appearing in the debit side of balance sheet, simply what they will say is you take it to the partners capital account, you debit, you write off in the partners capital account. But we'll understand. Okay, this is the right time to understand what is the right treatment, how will we treat this type of expenses. Okay, now see, say for example, let's do a timeline. Okay, this is 1/4/2023 and this is 31/3/2024 and this is 1st July 2023. Okay, let's say me, okay, I have an idea of starting a business at this point. Okay, I have an idea. So for example, I have an idea of starting some business at this point. Okay, I have an idea of starting some business at this point. Now I have an idea. Okay, I have the money, but I have some fear that whether my idea will be successful or not. Okay, whether people will like my product or not, whether people will like my business or not. Okay, so for this, okay, what will I do as a businessman? Okay, I will do some research, right? I will do some research, okay, whether the product which I am I am planning to introduce in the market will be good or not. Will people pay money to buy my product or not, right? So I'll have to do some market research. I have to do some market surveys, right? Now when I go to the market, when I do some research, right, I will have to spend some money. I will need some money, right? If say for example I have to make a questionnaire, okay, I'll have to print the questions, right? I have to give some printing charges. Now say for example I have done some survey, I cannot do it alone, right? I hire some people, 2-3 people to go with me, right? I have to pay them. So this basically I will need some money to do this research or survey. Okay, now say for example, now I have done the research and surveys. Okay, I know that my product will be people will like my product. Okay, now for this I have hired some engineers. okay, to make my product good, to make my product market fit. Okay, so I have taken some engineering services, or say for example some expert service. Okay, expert service. Now will a expert work on free of cost for me? No, he will take his payment, he will charge some money from me, so I will also incur some money on this research and on this engineering or expert service. Okay, now say for example I am a company, okay, I will have to start my business. Before starting business, I have to do some paperwork, right? I have to make my MOA, I have to make my AOA, right? I have to make some legal papers. Now for this, fees will be charged from me, fees, right? If I have to hire some CA, chartered accountant, or I have to hire some lawyer, right, to do my legal paperwork, will they charge fees? Yes, they will charge fees, right? Now I have to make my AUA, Article of Association, MOA, Memorandum of Association. I have to file this with the registrar, ROC, we call it ROC, okay, Registrar of Companies. Now there is some filing fees for this, filing fees. Okay, so all these things, all these items basically will take away money from me, right? All these things will take away from me. Now all these things will be done, all these expenses will be done before starting the business, right? See, before starting the business, at this point, at this period, I will spend all these expenses, right? Now can I take these expenses directly to my profit and loss account when I start my business, right? Say for example these expenses are of this period. Say for example these expenses was for this period, okay, after I started my business. Okay, there was no problem with this. What would I have done when I prepared my P&L account? Okay, I would have taken these expenses directly to the P&L account. I would have debited directly to the P&L account. Okay, now these expenses being expenses for this period, okay, can I do that on the first day I start the business? No, I cannot do that. Okay, so this type of expenses is called as what? We call it as preliminary expenses. Preliminary expenses. Pre means before starting the business. Okay, all the expenses which have been incurred before starting the business will be called as preliminary expenses. I hope this is very clear to you, right? Now the law has allowed us, the law has said that, see, you have incurred some expenses, okay, you have incurred some money to bring your business into existence. Okay, we will not do injustice with you. Okay, we will give you some way how you can debit this, how you can take this amount to your profit and loss account. Okay, we will give you some way how you can debit this amount to your profit and loss account. Okay, now see, say for example the amount which you have spent on these three items is rupees 1 lakh. Rupees 1 lakh. Okay, so if this amount was incurred at this point, what would you have done? This amount should directly go to the P&L account, right? This amount should directly go to the P&L account. What would have said to, say for example you have done some advertisement, okay, advertisement expenses 1 lakh rupees. Simple, right? Whatever amount you have spent on this period would have taken to the P&L account direct. Okay, work is done, nothing more we can do about it. But this expense related, it relates to this period, right? So we cannot take it directly to the P&L account. Now what the government has said, the law has allowed us to debit this amount in the P&L account, but subject to a condition. Okay, there are conditions. It is written in the Companies Act. You can, in future when you go for a higher studies, you will learn in your college curriculum. But as of now, what you have to understand is, see, the total expense is 1 lakh. The government has said, see, we will not allow you to debit this 1 lakh in the very first year of the business. Okay, what you will do is, you will divide this amount by 5. Okay, we will allow these expenses to be debited in the P&L account in 5 years. So every year, each year, you can debit 20,000 to your profit and loss account. Simple. See, 1 lakh was the amount of expense. Okay, so this expense, first year, second year, third year, fourth year, fifth year. Okay, so each year what you will do is, you will take this to debit side of P&L account. Okay, so each year you will debit 20,000 in your profit and loss account. Each year you will debit 20,000 in your profit and loss account. Simple, right? Now this is the way how preliminary expenses will be treated in the books of accounts. Okay, now when you prepare your balance sheet, when you see your balance sheet in the questions, okay, there will not be much questions, but in some questions you will see in your asset side, you will see preliminary expenses. Say for example 20,000, or you can say it may be with advertisement expenses. Okay, so this, whenever you see this type of items, you will have to understand this concept. Okay, this concept. Now see, this is the amount which is left over. Now whatever amount is given in the balance sheet, that will be the balance of the last year. That will be the balance of the last year. Okay, so this amount will be what? It will be debited to the profit and loss account. Okay, it will be debited to the profit and loss account in case of what? In case of companies, right? In case of companies. But in case of partners, partnership firm, what will we do? As per partnership act, this will be debited to the partners capital account. This will be debited to the partners capital account. Okay, now see, when you have incurred these expenses, at this point, okay, at this point, what will be the journal entry? Cash is going out to cash. Say for example 1 lakh, right? In our example just 1 lakh. Now can you debit profit and loss account? Can you debit partners capital account? No, you cannot do that. Because partnership firm has not yet been, the partnership firm is not into existence, has not come into existence as of now, right? So what will you do? You cannot do this entry. Okay, so the law has allowed us to make this as our asset. Okay, to advertisement expenses or to preliminary expenses. Okay, so see, cash is going out, cash is also asset, cash is reducing and our asset is increasing. Okay, and when we have to write off, what will we do? We have debited now. When we created these assets, now we will credit these assets, okay, to advertisement expenses. Once we credit, it will be what? It will, the balance of assets will be reduced, right? So see, each year 20,000 will be reduced. Okay, so first year 20,000 will be debited. It will go to debit side of partners capital account, because we are writing it off now. This is the expense, so it will reduce the balance of partners capital account. Okay, so now after first year 20,000 you have written off, right? Now what will be the balance? What will be the balance of advertisement expense account? Out of 1 lakh you have written off 20,000, so 80,000 will be left after first year. The balance of advertisement expenses will be 80,000. Now second year again you will write off 20,000, 60,000 will be left. Third year again 20,000, 40,000 will be left. Fourth year again 20,000, 20,000 will be left, and for fifth year finally you will write off whole amount, so balance will be 0. Okay, so I hope it is very clear to you. This is how it is done in real life. Okay, so this advertisement expenses is basically preliminary expenses, right? So this, where will it go? It will go to the debit side of partners capital account. Okay, I hope it is clear to you. A3, B2, C1, and the balance, bank balance, will go to the bank. Okay, so this is the answer of question number 99. So A3, okay, B2, A3, B2, C4, D1. So this is the answer for question number 99. Okay, I hope it is clear to you. Now let's move to question number 100. Okay, at the time of dissolution of partnership firm, if a partner takes over any asset, which account is debited? Okay, which account is debited? What's the question saying? At the time of dissolution of partnership firm, if a partner takes over any assets, which account is debited? Okay, now is assets account debited? No, because if we debit assets account, what will happen? The balance of assets will increase, right? We cannot debit assets account. Once we debit assets account, the balance of assets is a real account, right? We know that increase in assets will be debited, reduction in assets will be credited. So this is not the right option. Now point number B. What's point number B saying? Partners capital account. Will partners capital account be debited? Let's see. Okay, assets account and partners capital account. See, I have told you assets account will never be debited, so this option is also wrong. Realization account. Now there is a confusion between these two, B and C, B and D. Okay, now when you prepare your realization account, the assets, the balance of the assets is transferred to the debit side, right? Assets account is transferred to the debit side. Now the question is saying, at the time of dissolution of partnership firm, if a partner takes over any asset, which account is debited? Okay, if a partner takes over any asset, which account will be debited? Basically, when we are preparing realization account by partners capital account, our realization account is credited, right? So this option is also not correct option, right? So we are left with point number B. So partners capital account is the right answer. Okay, partners capital account is the right answer. Why partners capital account? See, when you prepare a partners capital account, this is your balance BD, right? So when you take over an asset, okay, the liability of the firm will be reduced because you are taking some assets, right? Say for example, payment to be made to the partner is 1 lakh rupees. Now there is an asset of 20,000 rupees, the partner has taken assets of 20,000 rupees. It will go through realization account, right? So what is the balance left to be paid to the partner in cash? 80,000, right? So this basically will reduce the liability of the partnership firm. So the right answer for question number 100 is B, partners capital account. I hope this is clear to you. Okay, if I'm going too fast, you can comment on the video. Okay, I will slow down my speed, or you can adjust the speed and you can watch on a slower speed. Okay, you watch the video, you please comment me if the speed is too high. If I'm going too speed, I will try to control my speed. Okay, now see, let's move to question number 101. What's the question saying? Which of the following is not mode of dissolution of the firm? Again, okay, same question repeated so many times. Okay, so by mutual agreement, which of the following is not? Question is saying which of the following is not mode of dissolution? Agreement is a mode. Illegal business, therefore compulsory dissolution. This is also a mode. Court will order us, the court will say you are doing some illegal business, so you close the business. Dissolution by court, right? We have done any misconduct, court will order us dissolution. Retirement of a partner. Now this is the right answer. Now if a partner retires, will the firm be dissolved? No, right? Remaining partners will carry on the business. So the answer for question number 101 is point number B. I hope this is clear, right? Now let's move to question number 102. Okay, 102. 102. Okay, now what's the question saying? At the time of dissolution of firm, okay, at the time of dissolution of firm, at what stage the balance of partners capital account are paid? Okay, again repeat question. Okay, after payment of outside liabilities, after payment of outside liability, this is a valid option. Before payment of loan by partner, will be paid to partners, will be paid the capital of partners before paying to the loan of partners? No, right? We know the rule, we know the sequence. First is outside liabilities, second one is partners loan, and third one is partners capital. We know this sequence, right? Point number C, after payment of outsiders loans and partners liability. Yes, right, this can be the right option. Before payment of outside liability, no, outside liability is to pay it first. So the right option for this answer is C. There will be confusion between A and C. Okay, A is saying after payment of outside liabilities. This is also a valid option, but the better option is after payment of outside liabilities and partners loan. Okay, so this is the answer for question number 102 is point number C. Okay, I hope it is clear to you. Simple and easy, right? Now this is questions on dissolution. I have some additional questions. Okay, let's try to solve that. Okay, now let's see some additional questions on dissolution of partnership. Additional questions. Let's see question number 1. On dissolution, realization account is debited with, which what type of items? Okay, realization account is debited with all assets. Option number A, all assets, all liabilities to be realized, all liabilities to be paid. What is the right option? Now when you prepare your realization account, what are the items which will be debited? Okay, we know that assets will be debited, but will all assets be debited? Now this is your balance sheet. You have assets, other assets, you have cash and bank. Okay, now will cash and bank be transferred to realization account? No, separate account will be prepared. So only some items, only assets other than cash and bank will be transferred, right? But the question is saying on dissolution, realization account is debited with all assets. Is this a right option? No, this is not the right option. Okay, all liabilities will go to the credit side. This is also not a right option. All assets to be realized, okay, I hope this is the right option. All liabilities to be paid. No, all liabilities to be paid is also transferred to the except in all liabilities will not include partners capital account, right? It will not include capital. It will only have creditors, outstanding expenses. All liabilities to be paid is transferred to the credit side of realization account. So the right answer for this question is point number C, right? Point number C. All all assets to be realized. Okay, I hope this is clear to you. Now let's move to question number 2. Question number 2. Dissolution of partnership between all partners of firm is called. Dissolution of partnership between all partners of firm is called. Dissolution of firm, dissolution of partnership, dissolution of firm's name, none of the above. What is the right option? Dissolution of partnership between all partners of firm is called. Dissolution of firm, there will be confusion between these two options. Okay, what will be the right option? Dissolution of firm. Okay, dissolution of firm will be the right answer. Now dissolution of partnership means, see, if there are 3 partners A, B and C, okay, out of A, B and C, B decided to leave the partnership firm. Okay, because of B's decision to leave the firm, will A and B's partnership come to an end? No, right? They will carry on the business. So dissolution of partnership between all partners of firm is called dissolution of firm. See, dissolution of partnership between all partners, okay, not only one partner, between all partners, will be called as dissolution of firm. Okay, now question number 3. Question number 3. Partners may dissolve a firm by mutual agreement. Partners may dissolve a firm by mutual agreement. This is specified in section dash of partnership act. Now basically this you have to buy out. Okay, so the answer for this is section 40. Okay, you have to buy out this section. Okay, section 40. Now let's move to question number 4. Amount realized from sale of assets. Amount realized from sale of assets is recorded on the dash side of cash and bank account. Okay, on which side? Debit side. We know that cash is a real account, debit what comes in, so it will be recorded on the debit side. Okay, debit side. Now let's move to question number 5. Okay, what's question number 5 saying? The firm of A and B was dissolved on 31st March 2020. The firm of A and B was dissolved on 31st March 2020. According to the agreement, okay, B had agreed to undertaking the dissolution work, okay, for an agreed remuneration of 8,000. Okay, what is the agreed remuneration? 4,000. Okay, and bear all the realization expenses. Dissolution expenses were rupees 5,000. Okay, pass journal entry. Now we have to pass journal entry for this. Okay, B had agreed to undertake the dissolution work for an agreed remuneration of 8,000 and bear all the realization expenses. Dissolution expenses were how much? 5,000. Okay, so what will be the journal entry for this? We know that journal entry will be realization account to realization account debit to who is paying the realization expenses? D's capital. Okay, D is the one, no, B's capital, sorry, B's capital account. Okay, B is the one responsible for realization expenses. Okay, B agreed to undertake the dissolution work for an agreed remuneration of 8,000. So see, the firm has agreed to pay him how much? 8,000. Okay, and bear all the realization expenses. Dissolution expenses were 5,000 rupees, right? How much the firm has agreed to pay? 8,000, and bear all the realization expenses. Basically, B will do the realization work. Okay, he will give money from his pocket, and the firm will pay him later. Right, so if I transfer this amount, if I transfer this expenses to realization to partners capital account, what will happen? It will go to the credit side, so the balance of the partners capital account will be increased, right? So the partner B will get more, right? So the liability of the firm will increase. Now the question is, what will be the amount? 8,000 or 5,000? What is the problem here? What will be the answer? 8,000 or 5,000? Now we have solved the previous questions where realization expenses was 10,000, agreed expenses was 10,000, but the partner has spent 12,000. So basically 2,000 was the amount given to the partner was 10,000, right? So in this case the agreed amount was 10,000 in this case. Now in this case, what is the agreed amount? 8,000, but the partner has spent 5,000. So that's up to him now. How he has done it effectively, we don't know. So 8,000 will be given to him. Okay, the agreed amount will be given to him. We have nothing to do with this 5,000. Okay, so this will be the journal entry. Realization account debit to B's capital account. Okay, question number 5 is done. Now let's see question number 6. Okay, P and Q are partners in a firm. They decided to dissolve the firm. Okay, assets other than cash is rupees 1,60,000. Cash is 25,000. Total liabilities is 1,75,000. Okay, on dissolution, assets realized rupees 1,25,000 and liabilities paid rupees 1,40,000. Okay, now we have to calculate net profit or loss on revaluation. Okay, so see, question has given us assets other than cash. Okay, assets other than cash has been given, and the value of cash has been given, right, and total liabilities have been given. Okay, on dissolution, assets realized 1,25,000. Okay, assets was realized how much? 1,25,000, and liabilities paid is how much? 1,40,000. Okay, so basically the answer how we can find is we'll prepare realization account. Okay, so question number 6, let's prepare realization account. So what is the value of assets other than cash? 1,60,000. To assets 1,60,000, and what is the value of liabilities? 1,75,000. By liabilities, you will say sundry assets. Okay, sundry assets by sundry liabilities. What is the amount of liabilities? 1,75,000. Okay, and on dissolution, assets realized how much? 1,25,000. See, assets is realized is 1,25,000. So where will it come? It will come on the credit side by bank assets realized. Okay, it's the amount 1,25,000. 1,25,000, and we have made payment to creditor for liability 1,40,000. Okay, to bank liabilities. How much? 1,40,000. Okay, so let's see, we'll get profit or loss. Okay, so 1,75,000 plus 1,25,000 minus 1,60,000 minus 1,40,000. Okay, so see, what is the total? The total of this is 3 lakhs, right? And the total of this is also 3 lakhs. See, so will there be any profit or loss? No. Debit side is equal to credit side, so there will be no profit or loss. So answer will be no profit, no loss. Okay, now let's move to question number 7. What's question number 7 saying? On dissolution of partnership, bank overdraft is transferred to which account? Cash account? No. Bank overdraft is related to bank. Bank overdraft means money which we have withdrawn in excess. Okay, you know the concept of bank overdraft. I hope you have understood the concept of bank overdraft. If not, you can see the basic lecture. Okay, I have covered in detail bank overdraft. Okay, so this bank overdraft facility you get it on current account, right? So what do you mean by bank overdraft? Say for example, you had 10,000 in your bank, in your current account, but you have withdrawn 12,000. Okay, so what is the overdraft amount? 2,000 is the overdraft. Okay, so where will it go? It will go to the credit side of bank account. Okay, so what will be the answer? Bank account. The answer is bank account. I hope this is clear. Now let's move to question number 7. Question number 8. On dissolution of a firm, partner's loan account is transferred to. Okay, partner's loan account is transferred to. Is it transferred to realization account? No. Is it transferred to partner's capital account? No. Is it transferred to current account? No. It is transferred to partner's loan account only. Okay, so the answer is none of the above. So what is the answer? The answer is none of the above. I've told you now, partner's loan will be taken to the partner, the amount will be in the partner's loan only. Okay, it will not be transferred to realization, nor it will be transferred to partner's current, nor it will be transferred to partner's capital. Okay, I hope this is clear. Now let's talk about question number 9. After transferring liabilities like creditors and bills payable in the realization account, in the absence of any information regarding the payment, such liabilities are never paid, partly paid, fully paid, none of this. Okay, so what will be the right answer for this? The right answer will be fully paid. Okay, so irrespective of the question giving that payment has been done or not, okay, we always have to settle the liabilities. Okay, in case of dissolution, liabilities will always be settled. So the answer for this is fully paid. Okay, now question number 10. I guess there is some problem with this. No, we can just start. Okay, wait, what's question number 10 saying? When realization expenses are paid, by the firm on behalf of a partner, who is paying the realization expenses? Firm is paying on behalf of the partner. Okay, such expenses are debited to which account? What will be the answer? Partner's capital account. Okay, so the answer will be B, partner's capital account. partner's capital account. Okay, why? See, there is a difference. Okay, we have to understand this difference. Question number 10. Okay, now there are cases where, say for example, A is a partner. A is the one responsible for realizing the assets and paying the liabilities. Okay, now A has been appointed, okay, to do the realization work, wherein he will get realization expenses. Okay, the firm will pay realization expenses. Case number B, this case number 1. Case number B is A is the one who is responsible. Okay, A will be the one who will pay the realization expenses from his own pocket. Okay, so this question relates to the case number B. Okay, so in that case, it will be debited to partner's capital account. Who is responsible? Partner is responsible to pay from his own pocket, but who is paying on his behalf? The firm is paying. Okay, so when you prepare partner's capital account, okay, what will happen here? See, by balance BD, okay, all the amount payable to the partners will be written on the credit side, right? So when you debit the realization account here, realization expenses, what will happen? The amount payable to the partner will be less, right? So the balance will be paid after deducting the realization expenses. Okay, so I hope this is clear. So now let's move to question number 11. Okay, what's in 11 saying? Unrecorded assets when taken over by the partner are shown in, okay, unrecorded assets which when taken over by partner are shown in. Unrecorded means there is, the assets has not been recorded in the balance sheet. Okay, this is the meaning of unrecorded assets. Now there is no this assets has not been recorded in the balance sheet. Okay, so will it be transferred to the debit side of realization account? Okay, will it be transferred to the debit side of realization account? No, right? This is not the right option. Debit side of bank account, will it go to the bank account? Who is taking? Partner is taking. Are we getting any money for this? No, right? So it will not be transferred to bank account. Point number C, credit side of realization account. Okay, and point number D is credit side of bank account. Bank account will never be included because we are not getting cash. Partner is taking, right? When partner takes an asset, the amount payable to the partner will be lesser by the amount of assets he is taking. Okay, so what will be the right answer? The right answer will be C, credit side of realization account. Now see, when you prepare a realization account, what will happen? Will any unrecorded assets be transferred? No. Unrecorded assets means record is not there in the balance sheet. Okay, so when you, say for example, by mistake you have transferred this to realization account, what will happen? What will be the journal entry? Realization account debit to assets, right? To assets. Now this is an unrecorded assets. Okay, so you cannot credit. If you credit, there will be a negative balance. There will be a credit balance of assets. Okay, so you cannot transfer it to debit side of realization account. Understood? Now a partner is taking these assets which is unrecorded, right? So it will be a gain for the partnership firm. Okay, so by partner's capital account, so it will be debited to, it will be credited to realization account. So the right answer for question number 11 is point number C. Okay, I hope this is absolutely clear. Now let's come to question number 12. Unrecorded liabilities when paid are shown in. Unrecorded liabilities when paid are shown in which side? Debit side of realization account, debit side of bank account, credit side of realization account, credit side of bank account. Now what will be the journal entry for unrecorded liabilities? Let's pass the journal entry first. Okay, you are paying cash, right? So it will be realization account debit to cash or bank. This will be the journal entry, right? So bank account is what? Credited, money is going out, right? So where will it be transferred? Debit side of realization account, okay, debit side of balance sheet, credit side of realization account, credit side of balance sheet. So what will be the answer for this? The answer will be A and D. Okay, so the answer will be A and D. So see, it's going to the realization account now, and realization account is debited and this is credited. Okay, so the right answer will be A and D for point number 12, question number 12. Okay, so now let's see question number 13. Okay, on dissolution of the firm, partners capital account are closed through, okay, it is closed through what? Realization account? No. It is closed to bank loan account? No. Drawing account? No. It is closed through cash and bank, right? This is a repeated question. Okay, so whenever we make payment to a partner, it will be closed through cash and bank account. Okay, I hope this is clear to you. Okay, now let's move to question number 14. What's question number 14 saying? Let's say, which of the following statement is correct? Okay, which of the following statement is or are correct? Okay, statement number 1, dissolution of firm is subject to dissolution of partnership. Dissolution of firm is subject to dissolution of partnership. Okay, is this statement correct? Dissolution of firm is subject to dissolution of partnership, right? If a firm has been dissolved, will partnership form be dissolved? Yes, obviously, right? So this can be the right option. When firm's goodwill is taken over by a partner, okay, when firm's goodwill is taken over by a partner at the time of dissolution, it is not recorded in the books. It is not recorded in the books, okay. When firm's goodwill is taken over by a partner, okay, at the time of dissolution, it is not recorded in the books, okay. So for example, any partner has taken a goodwill, okay, any partner has taken a goodwill. So what will happen? So for example, this case will never be there, okay, in real life. So when you transfer goodwill, you transfer to realization account, right? Realization account debit to goodwill, okay. You have transferred this to realization account. Now when a partner takes goodwill, what will happen? What will be the journal entry? Partners capital account to realization, right? So will there be any journal entry? Yes, there will be journal entry, right? There will be journal entry, okay. What's the question saying? When firm's goodwill is taken over by a partner at the time of dissolution, it is not recorded in the book. Will this statement be correct? No, it is recorded in the book, because this will be the journal entry, okay. This will be the journal entry and we will record it in the book. So only one. What will be the right answer? Only option number 1, okay. Option number 1 is the correct answer. Now let's see question number 15. In which condition a partnership firm is deemed to be dissolved? Okay, deemed means as we will assume it to be dissolved, okay. So in which situation, okay, it will be deemed to be dissolved? On a partner's admission. When a partner is admitted, will the firm be dissolved? No. On retirement of a partner. When a partner retires, will the business come to an end? No. The remaining partners will carry on the business, okay. On loss of partnership. When a partnership firm is in loss, they are incurring loss, will it be dissolved? No, right. On expiry of the period of partnership, okay. So what will be the right answer? The right answer will be D, okay. If there is any clause wherein it has been written that partnership will be done for a specific time, and if the time has, that specific period has been over, so it will be dissolved, okay. I hope this is clear to you. Now let's move to question number 16. Question number 16. On dissolution of a firm, its balance sheet revealed total creditors 50,000, total capital 48,000, cash balance 30,000, okay, sorry 3,000. Its assets were realized at 12% less than the book value, okay. Loss on realization will be, so we'll have to find out the loss on realization, okay. Now in this type of question, what you will have to do, see, the balance sheet reveal total creditors, total capital, okay, and cash balance. So assets has been realized, but the balance sheet figure of assets is not given, okay. So what we'll have to do, first we'll have to find the amount of the assets, okay. Then it has been realized at 12% less, okay. 12% less means 100% is the book value. Out of this, it has been realized at 12% only. It has been realized 12% less, okay. So it has been realized 88%. So we get amount for 88% only, okay. So now before this, we have to find out the value of the assets, okay. So let's, for this, what we'll have to do, we'll have to prepare balance sheet, okay. We'll have to prepare balance sheet for this. So balance sheet, capital is given, the amount of capital is given, the amount of capital is given. What's the amount of capital? Total capital is 48,000, okay, 48,000. Now next figure which is given is creditors. See, creditors is given 50,000, okay. So creditors is given 50,000, okay. And the next figure which is given is cash balance, okay. Cash balance is, cash in hand is 3,000. Cash in hand is 3,000, okay. Anything else regarding the balance sheet is given? No, okay. This figure is for realization. This figure is basically for realization, okay. So now this is the amount of, this is the items of balance sheet only, okay. Now what is the total of liability side? What is the total of liability side? 48,000 plus 50,000 is 98,000, okay. We know that balance sheet liabilities and assets is always equal, okay. So what will be the total asset side? The total asset side will be 98,000. So if I less 3,000, what will be the 95,000? This will be for sundry assets, okay, balancing figure. Now we have found out the amount of sundry assets, right? Now we can prepare realization account. Okay, so when you prepare realization account, sundry assets will go on the debit side to sundry assets 95,000. okay, this has gone to the debit side. Creditors will come on the credit side by creditors 50,000. okay, will capital go to the realization account? No. Cash in hand will also not go. okay, now the question has given us that assets has been realized at 12% less. 12% less means, what do you mean by 12% less? Say for example, the value of assets is 95,000. okay, now we have realized 12% less, means out of 100 we have realized only 88%. okay, so what will be the value of assets realized? 88%. 95,000 into 88% will be 83,600. so where will this amount go? It will go to the credit side by bank account assets realized. okay, how much? 83,600. done. Now we have to calculate the loss on realization. okay, now one thing you should not forget is, see, creditors, right? This creditors is there in the balance sheet, so this creditors will always be paid off, right, when we prepare realization account, irrespective of the question giving us. okay, if the question, even if the question is silent, these creditors will be paid off anyhow. It will be paid off. okay, so to bank creditors 50,000. okay, now we can find out the profit and loss. okay, I hope there will be loss. okay, 95 plus 50 minus 50 minus 83,600. okay, so what is the amount of loss? By loss transferred to partners capital account is how much? 11,400. okay, so what is the answer for question number 16? 11,400. okay, if you want you can copy this. okay, 11,400. question number 16 is, the answer is 11,400. okay, I hope this is clear. Now question number 17. On firm's dissolution, when a partner voluntarily gives his personal assets to the firm, okay, creditors as payment, the amount credited will be, what's the question saying? On firm's dissolution, when a partner voluntarily gives his personal assets to firm's creditors, okay, as payment, the account credited will be, what will be the account credited? If a partner has voluntarily gave his personal assets, okay, what will be the journal entry? Let's see. It will be realization account debit to partners capital account. See, a partner is voluntarily giving his personal assets. okay, normally this should be cash account, realization account to cash should go out, right? But a partner is giving his own assets, his personal assets. okay, so now what will the firm do? The firm will pay this amount, okay, to the creditor, to the partner, by crediting his partner's capital account. okay, so question number 18, what will be the answer of 17? Partner's capital account. okay, now let's move to question number 18. On dissolution, when a partner takes over an unrecorded assets, okay, dash is credited. When a partner takes over an unrecorded assets, okay, dash is credited. What will be the journal entry? Let's see. Question number 18. What will be the journal entry? What's the question? On dissolution, when a partner takes over an unrecorded assets, okay, so partner is taking over an unrecorded assets, the journal entry will be partners capital account debit to realization account. okay, so what will be created? Realization account will be created. okay, so see what happens when you prepare your realization account. Now unrecorded assets be transferred to the debit side? Will unrecorded assets be transferred to debit side? No, these unrecorded assets will not be transferred to debit side. Why? Because these unrecorded assets not in the books. okay, it's not recorded in the books. okay, so now when a partner takes an unrecorded assets, okay, the cash payable to the partner will be reduced by the value of assets he has taken, right? So partner's capital account will be debited and realization account will be credited. Okay, so the answer for this is realization account. Realization account. Okay, now let's move to last question of dissolution, question number 19. On dissolution, when a partner takes over an asset, dash is debited. Dash is debited. Is this okay? It's credited. Now dash is debited. What is debited? Again same. See, partner's capital account to realization account, right? This is the journal entry for question number 19 as well. Okay, so partner's capital account will be debited. Okay, so the answer is partner's capital account. I hope you have understood. Okay, this is all for question for dissolution of partnership firm. Okay, now in next lecture we'll be talking about unit number 1. Okay, accounting for not-for-profit organization. Now I hope you have enjoyed this session, and I hope things are clear now for dissolution of partnership firm. Okay, now again, as I used to say before leaving, okay, before closing the session, I'm planning to start tuitions, okay, for class 12 students. Now if there is anyone, any junior of yours, okay, who wants to take tuition, you can please refer them, okay, and they can try me out. Whether if you are liking the way I'm teaching, okay, the way I explain, you can please, it's a sincere request to you that please refer them, and so that they can come and get quality education, get quality, understand concepts in a better way, and solve questions and pass class 12s with flying colors. Okay, so that's all for today. Thank you, take care and study hard. Exams are almost like it'll be in, you don't have much time left, so if you cover all the videos which I upload and solve all the questions, you will obviously it will be sufficient for your exam. Okay, thank you very much. Bye bye.